Obviously, Bitcoin hit new highs over the course of the year, but still things like Solana and Ethereum still haven't really broken to new highs versus the last cycle, which is confusing people. That sent me down a rabbit hole of, okay, what's really going on here? And the kind of foundational work that I did called the Everything Code was based on this 4-year cycle to do with the 4-year debt maturity of the United States and most countries. I redid the work and found out that in 2022, because interest rates got down to zero again in 21 and early 22, they restructured the debt to 5 years. So it's added another year. So we've got this weird kind of hybrid extra year that we've never had before. And we've seen that in things like the business cycle. The ISM survey gives us a guide to the business cycle.
Bitcoin has powered into new highs this year, but the rest of the crypto market is dragging its feet. Ethereum, Solana, and other major players are still stuck below their previous peaks. For anyone used to the all boats rise rhythm of past bull runs, it feels off. People are wondering why the usual momentum isn't there. Is something broken? Or is this cycle playing by new rules we haven't fully grasped yet? Raoul believes the answer lies beyond crypto charts and into the world of sovereign debt. His Everything Code theory connected market cycles to the typical 4-year maturity of government bonds. But when interest rates hit zero again in 2021 and early 2022, that playbook changed. Governments extended a huge portion of debt out to 5 years. That extra year may not sound like much, but it quietly shifted the entire macroeconomic pulse. This 1-year delay could explain why the market feels like it's dragging a heavy foot. The energy is there, just not evenly distributed. If Raoul is right, it's not that altcoins are broken or forgotten. They're just waiting for the macro clock to catch up. When it does, the next phase of this cycle could hit harder than anyone expects. Let's now take you back to Raoul Pal's latest market analysis, where he connected the dots no one else could see.
So yeah, I mean, this year's been a year I think that many people have so far found frustrating because, everybody wants exponential price rises and every number to go up. And it's not been that kind of year. What we've seen in the background is this massive change in regulation in the US. So the background is incredibly positive. Passing of the stablecoin laws, we're still waiting for the Clarity Act to come through. We've seen pretty much every bank and financial institution say they're going to build on blockchain rails. So we've seen the rise of the ETFs, the DAT. So we've seen this whole kind of Wall Street infrastructure build out on crypto. And you would have thought, had we have said this before, you'd say the number was much higher. Now, obviously, Bitcoin hit new highs over the course of the year, but still things like Solana and Ethereum still haven't really broken to new highs versus the last cycle, which is confusing people. That sent me down a rabbit hole of, okay, what's really going on here? And the kind of foundational work that I did called the Everything Code was based on this 4-year cycle to do with the 4-year debt maturity of the United States and most countries. And I redid the work and found out that in 2022, because interest rates got down to zero again in 21 and early 22, they restructured the debt to 5 years. So it's added another year. So we've got this weird kind of hybrid extra year that we've never had before. And we've seen that in things like the business cycle. The ISM survey gives us a guide to the business cycle. And people talk about this K-shaped economy where, growth stocks have been going up. But meanwhile, things like the economy have been relatively slow for normal people. And that's a function of this business cycle not picking up, rates staying high, and the fact that they didn't need to refinance the debts in massive size this year. But it all comes to next year. So it's been really a patience game of the sideways choppy market. But people forget also, last year was the same. Last year peaked in somewhere early in the year and then did nothing all year. Everyone got so frustrated. Everyone was flinging poo at each other online and getting angry with each other. And then before you know it, took off like a rocket ship in November and December. And I think it's somewhat similar this time around. And the rocket ship this time around is based on the fact that they've kind of not been adding liquidity into the US. That's the magic formula that drives the price higher, the debasement of currency. There's various mechanisms they use to add liquidity. The classic used to be quantitative easing, where they just print money and put it on the balance sheet. But this time around, they've not been doing that. They've actually been tightening. And so then they have this mechanism called the reverse repo and then the Treasury General Account. And these things they've been using. And what's happened is the government shutdown has stopped the government actually spending money, which means that they've held back and maybe $250 billion of stimulus that needs to come into the economy. So that, as soon as the government reopens in the next few days, we'll start to see liquidity flowing back in. Then we've got the Federal Reserve cutting rates. Then we've got the Clarity Act coming. Then we've got some changes to bank regulations to allow them to hold more reserves. And before you know it, the whole liquidity flywheel kicks off. Well, the stability is a double-edged sword. It's kind of, institutional investors prefer the less volatile approach. It still does decently well. But retail investors who have their hopes and dreams in the power of the returns of crypto then get angry and frustrated that they're not getting those returns unless they've been very selective in what they've bought. There's certain things. I know the Binance token hit new all-time highs. Bitcoin did, which in this massive run recently in Zcash. But a lot of these things don't stick for very long. So what we found again is like this bifurcation where some projects have done really quite well considering the stability-based environment, but a lot of other stuff has bled 50% or 40% in the meantime. So it's kind of weird. So stability is a good thing because it attracts more institutional capital. It's a bad thing because it keeps retail away. So retail investors went to tech stocks instead because there were easier returns. So if we think about 2025, the issue is if the liquidity pie didn't grow, then these narratives, they catch traction, but it means other things don't because you're recycling the same money. Mm-hmm. So you keep recycling the money, and then before you know it, you're buying the highs and it collapses back down again until the liquidity comes in. And then you can anchor these narratives that are more pervasive and can last longer. So I think the privacy narrative makes a lot of sense considering where Europe and the UK has been so far in this whole crypto equation. They've been kind of very, very cautious. And so people are concerned about that and the central bank digital currencies and what they're trying to do with that. So I think this one lasts. Obviously, it won't go up in a straight line. It has done, but things need to correct. I don't know where the next narrative. There's always a narrative in layer one somewhere. What's the new, faster, getting traction layer one narrative? And then it feels kind of wide open. Often it starts with people look at cash flows and DeFi and say, well, this protocol's producing cash flows. And later in a bull market, nobody cares about cash flows. It's then super narrative driven. We've had the rise of hyperliquid. It's not yet clear to me where the next new narrative comes from. Maybe it just comes from the broad stablecoin adoption from the financial system and who's building on what chains for that. I think that's a big one. And again, I'm not really clear what the next narrative is until liquidity comes and the market will start to focus on, the core things. But usually in the latter part of a cycle, what you get is like a hyper focus of 5-6 things that go up a lot that really catch the market's attention and feeds on itself. But it's not yet clear what those are. And you don't want to believe it either because in the prior years, they go up and then they come back down again. You're like, really? I mean, it could be AI and crypto again, because that's not going away either. So, but we just have to wait and see. You see how this works is when the market goes back to new highs or near the highs, people recycle gains or their optimism into longer term assets, things like digital art. And so that happens. And as we came back down to the bottom of the range, we saw the digital art market slow down again. But as we start breaking, particularly Ethereum, 5,000, and let's say the big positions people have, stuff like Solana, once that starts really breaking new all-time highs, you'll see a lot of money getting recycled into these long-term kind of trophy assets. It's exactly the same thing that people do with watches. It's really interesting. It's all driven actually by the business cycle. So whether it's watches, fine wine, or digital art, they're all driven by the business cycle. So once people are starting to make money, have a bit of excess earnings, they recycle it into trophy assets. So that, again, lies ahead. Once we start breaking new highs, we'll see a lot more of this. And I think people are going to be really shocked at the price some of this art trades at. You'll suddenly start to see things like, a piece of digital art trading for $20 million. I mean, they've traded as high as 70 million in the past. But, these are big numbers, and we will see that all over again.
This year wasn't the moonshot many hoped for. Prices have danced sideways, frustration is thick, and social feeds have turned into battlegrounds of blame. While Bitcoin did hit fresh highs, most of the market feels stuck in limbo. But beneath the surface, there's been a quiet build-out. Stablecoin laws are gaining traction. ETF frameworks are falling into place, and banks are inching closer to blockchain rails. On paper, this should have sent prices soaring. Instead, we've been stuck in a holding pattern that's starting to make a strange kind of sense. It turns out the entire cycle may have shifted. A delayed debt rollover by governments has stretched the usual 4-year rhythm into 5. That small tweak has thrown off everything from business sentiment to crypto momentum. Add installed liquidity, a paused stimulus, and retail exhaustion, and you get a market that's more simmer than sizzle. Still, there's power building behind the curtain. A reopening of government spending, rate cuts, and updated banking rules could flip the switch fast. When liquidity returns, it doesn't trickle. It floods. When that happens, narratives will erupt again. Stablecoins, privacy tokens, DeFi, even NFTs as modern trophy assets are all waiting for ignition. The next wave won't warn you. It will just take off. While Raoul points to structural delays in liquidity, Tom Lee highlights market fear and investor exhaustion. From macro stress to liquidation shocks, his take captures how fragile sentiment really is. Let's watch clips from his interview.
Well, Leslie, I think the markets are a bit nervous in crypto land and equity world because one, we've had a government shutdown, and then there's been doubts about AI valuations and people raising questions about that. So AI stocks have corrected and many growth stocks have corrected. And then in crypto specifically, it's been dealing with two issues. One is there was this big liquidation event on October 10th, one that really was a larger liquidation event than anything seen in history. And the second is because crypto is risk on, I think markets are really struggling with what the Fed's going to signal on December, because, if you end up with a hawkish Fed, it gets crypto investors very nervous. I think that's all creating this downside pressure, but I think the good news is there are signs of exhaustion. I did speak with Tom DeMark of DeMark Analytics, and he thinks there are signs that would look like a bottom that could be occurring sometime this week. Ethereum is a smart contract platform, so it differs from Bitcoin, which is a store of value, and in many ways its virtue is that it's inert, and it represents digital gold and a good store of value. Ethereum, on the other hand, is because it's a smart contract platform, is really the rails where I think a lot of things are going to be built. And one of the big breakouts this year has been stable coins, but it's also been things like prediction markets, and now talk about tokenizing more than just dollars, but equities and real estate and alternative assets and other assets. And a lot of that will be built on Ethereum or layer 2. So I think from a perspective of what the ecosystem looks like, Ethereum is a place where there's a lot of activity taking place, and you can measure it by transaction volumes or transactions per second or even value locked on the chain. And these are all rising. So to us, I think it's a story that still is in the earliest stages, and one of the reasons we consider it a super cycle.
Tom, in terms of just the overall volatility, what are some of the near-term headwinds you're expecting Ethereum to face?
Well, one of them is the industry did suffer a big liquidation event that I think crippled many players and wiped out many accounts. So I think that this, just like in 2022 or in 2020, it does take a few weeks for the industry to sort of find its footing, and I think that's why crypto prices have lagged here. And it does have the signs of that maybe a market maker or two actually is unable to provide market liquidity. And as you know, as liquidity contracts, it's the same thing as the central bank tightening. So it's almost like crypto QT. I think the other thing the markets are grappling with is people talking about the 4-year cycle. Many are convinced that Bitcoin prices have peaked. So in some ways, Bitcoin being the blue chip and the bellwether is important for crypto, because if Bitcoin makes a new high this year, then it really obviates the fact that there is a 4-year cycle. And so it's, to me, between now and year end, I'm pretty bullish on stocks. This sort of weakness in the first half of November was what we expected. But as markets rally, I think that's going to help propel Bitcoin to an all-time high.
I think we're nearing a bottom. I look at this as a great buying opportunity for long-term investors. Bitcoin was the first thing to turn over before this broader market pullback. It was sort of the canary in the coal mine, signaling that there was some risk in all sorts of risk on assets. I think it'll be the first thing to bottom, and I agree with Tom. We're getting very close to that point. So I think it's an exciting opportunity, again, for people who are looking out a year or more into the future. I think it's a generational opportunity for long-term investors, whether you're looking at Bitcoin, Ethereum, or Solana. To double down on what Tom said about Ethereum specifically, look, I think investors are very nervous broadly about the economy, about AI valuations, about tariffs, about the broad economy. You want to look for secular trends that are decoupled from that. I think regardless of what happens on the economy in the next year, stablecoins will grow tremendously. I think regardless of what happens, tokenization will, maybe 10x in the next few years. Prediction markets are going to be huge. Decentralized identity and digital identity are going to be huge. Ethereum lets you play those secular trends, which are in this enormous growth phase, almost regardless of what's happening in the broader economy. So for me, it's really it's a generational opportunity, and to get in at these prices, I think really is almost a gift for long-term investors. It's a tremendous opportunity.
Markets have been tense, and crypto is feeling the weight. Between a drawn-out government shutdown, mounting uncertainty around inflated AI stock valuations, and the largest liquidation event in crypto history earlier this October, investors are nervous. Sentiment is fragile, and it's not just about what happened. It's about what might come next. All eyes are on the Federal Reserve's December meeting. If the Fed signals it's staying hawkish, risk assets could take another hit, and crypto often reacts first. But zoom out, and the picture starts to shift. Beneath the surface, signs of exhaustion are emerging. Some analysts believe a local bottom could be forming. This sort of frustration-driven stagnation often appears right before markets flip. Ethereum, for example, isn't just sitting still. It's quietly doing the heavy lifting behind the next wave of digital finance. Stablecoins, tokenized real-world assets, and decentralized infrastructure are all building on its rails. Network usage is growing, even if the price has yet to reflect it. What's missing right now is liquidity. When liquidity dries up, volatility rises, and markets drift without clear direction. Crypto has been operating under those conditions for months. But that could soon change. Between expected government stimulus, potential rate cuts, and evolving bank regulations, there's a lot of dry powder waiting on the sidelines. If that capital starts to move, the reaction could be swift. Price is often the last thing to respond, but when it does, it tends to move fast. And then there's Bitcoin. If it reclaims a new all-time high before the year ends, it wouldn't just be a chart milestone. It would challenge the belief that we're locked in another 4-year cycle and ignite fresh energy across the market. This phase may have felt slow, uncertain, and disappointing, but it's also been a setup. Not every cycle ends with fireworks. Sometimes it begins with a pause before everything takes off at once. As we wrap up, which narrative makes more sense to you right now? Raoul Pal's liquidity thesis or Tom Lee's sentiment-driven outlook? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.